The countdown is on. Everything you need to get the edge at the end of the market day. This is The Close.
An inflection point for the AI trade? Question mark? Or much ado about nothing? Live from Studio 2 here at Bloomberg headquarters in New York, I'm Romaine Bostick.
And I'm Katie Greifeld. We're kicking you off to the closing bell here in the U.S. on this big Nvidia earnings day. A lot of interesting action underway in the S&P 500, snapping a 4-day losing streak, but you can see really giving up gains. We were higher by more than 1% earlier in the day. Now it's positive by about 0.2%. We'll see if we can hold on. The NASDAQ 100 higher by about 0.3%. All of the action is going to be after the bell rings today. But even still, you can see the volatility draining out of the VIX right now, down almost a full point here. You can see that we are back below 24, and then Bitcoin. That bid we were talking about yesterday, Romaine, it's long gone. Now down 4%. We are back below $90,000 a coin.
Yeah, a lot of the momentum leaders not doing a whole lot of momentum. Nvidia, though, is higher on the day, but we should point out deep in the red on a month-to-date basis. In fact, in the bottom quartile of returns in the NASDAQ 100 since October 29th, that was the day it became the first $5 trillion company. It slid into correction since. Yes, correction, dragging the entire AI ecosystem down with it. In fact, two of the biggest ETFs in this space, the Visa Shares AI Supercycle ETF and the Global X AI ETF, each down 10% so far this month.
I would argue that all this skepticism about this big technological revolution we're having is good news because it's keeping the valuation, it's keeping the bubble down in these stocks.
Now, let's be clear. Nvidia is still the fastest growing large company on a revenue basis out there. But that growth rate is slowing considerably. And it's roughly $200 billion in annual revenue that it's set to generate this fiscal year. It doesn't even rank in the top 25 of publicly traded companies. Microsoft is tracking at $300 billion. Alphabet pushing towards $400. Apple, believe it or not, nearing $500. And the biggest revenue generator of them all, it's not even a tech company. It's Walmart. Its revenue likely to surpass $700 billion this fiscal year. Now, while the growth rates for those companies are indeed a fraction of Nvidia, they are more in line with long-term means, a means that Nvidia itself may eventually revert to. In fact, Walmart's earnings tomorrow could be just as consequential as Nvidia tonight. After all, while corporate spending on AI has become a driver of GDP, it's still nowhere close to its historic contribution from consumer spending. And we're going to spend a lot of time, Katie, over the next couple of hours talking about both.
Absolutely, including right now, more about that consumer spending, less so than the corporate spend. There's an interesting chart behind me. We were talking about it a little bit earlier this week as well, that you take a look at the blue line here. That is general merchandise stores that Bloomberg tracks. You can see that in blue, and it's really been moving lower since March or so with some volatility, but the direction of travel is clear. Then you take a look at that overlaid with U.S. second measure consumer spending as well. That's your white line, more of a drift, but still you can really see since September that too is trending lower. And I think that's a nice frame, Romaine, that you think about Walmart earnings coming tomorrow morning. We're all going to be all eyes on Nvidia and that big tech spend, but the consumer powering this economy, there's a lot of question marks there as well.
Well, let's get some thoughts here on the state of financial markets and the state of the economy with, of course, one of the most celebrated financial analysts on Wall Street. Meredith Whitney joins us right now, the CEO at the Meredith Whitney Advisory Group. And Meredith, I do want to start off with the consumer because there's been a lot of focus on that, particularly with a lot of the government data now starting to be released. And there's a long-term trend that we've been talking a lot about on this show, how if you're higher income, you're probably doing okay, you're probably still spending. But at the lower end of the spectrum, we've continued to see deterioration there. And I'm wondering, when does that become an actual market event?
Well, the lower-end consumer, unfortunately, does not matter that much to the overall economy because the higher-end consumer contributes, over 60% of total spending. So while the lower-end consumer is struggling and has been struggling, and I would argue that they're going through their second recession inside of 3 years. The first was triggered by the stoppage of COVID stimulus checks, and so that change was a dramatic change for the lower end consumer whose after-tax income rose considerably with the COVID stimulus checks. And And then now, because of wage pressures, because of inflation, and because of loss of jobs, really with the travel, leisure, and hospitality segment, I think there's going to be more pressure there. But one thing that I have found that has been very interesting, and so I look at data from under every stone because I'm a data junkie, is one area where that has powered consumer discretionary spend has been what I call the avocado toast generation. So this is the 24 to 38-year-old older Gen Z and younger and younger millennials, and they carry 52% of student debt. And with the resumption of student debt payments, they've really been impacted. And for the very first time on third quarter earnings, this was 2 weeks ago, Sweetgreen, Cava, Chipotle commented that this was impacting their business. And if you think about what businesses have done over the last 5 years, forbearance or students weren't required to make debt payments on their student debt since COVID. So that's almost 5 years. That's $200 a month for 5 years, which is incremental spending that doesn't exist anymore. And by comparison, total COVID stimulus checks were $812 billion that went out to 165 million Americans. Debt forbearance for student lending was roughly 400 billion and went out to 42.7 million Americans. So that's real concentrated excess discretionary spend that is not filtering through the economy anymore. And I think that's stinging hard.
Well, let's talk about some of the companies that are really feeling the burn here. You mentioned a few of them, but you think about Cava, Sweetgreen, Chipotle. I'm looking at year-to-date charts here. We're talking about double-digit and then some losses in a lot of these names, Meredith. And it sounds like you're saying that pain could continue quite in a big way here.
Oh, I don't see any way around it not continuing. You have retailers like Urban Outfitters, any retailers that have really shifted their marketing over the past 5 years, thinking that this was a permanent trend when really it was a desert mirage fueled by government spending, is up for a rude awakening. Now, Walmart is not in that category. Walmart just continues to just offer a better and better customer experience, and they're just taking market share from weaker competitors. So I expect Walmart to post pretty good earnings tomorrow. Grocery is still a strong spending category, and Walmart just offers a great value. I think the rubber is going to meet the road when the dollar stores report in a couple weeks, and I think that they might be challenged.
I am curious, Meredith, too, about just kind of when we talk about the state of the consumer, a lot of changes going on. We're going to talk a lot about AI today because of Nvidia, and there's been a lot of discussion about how that reshapes our economy, whether we end up losing a lot of jobs or whether those jobs just shift to somewhere else. I mean, you wrote a great book, I think, about 10 years or so ago that kind of talked about some of the shifting sands in our economy. And I am curious, if you look at the current AI boom that we're in, and it is certainly a boom, whether it's a bubble, that's another question. But do you see that having a fundamental impact overall on what our economy ends up looking like in the future?
Yeah, I think that we talk a lot about AI and the impact on jobs, but if you look at if this is a word, robotization or automation, Amazon said that they'll reduce headcount by 600,000 employees by 2030. That's half of their workforce. And that's not solely AI driven. That's driven by automation in the warehouses, in the fulfillment centers. So I think there's a confluence of a bunch of things that are going on in the economy that are really going to pressure jobs. And it's hard pressed. I think psychologically, managers think that AI will ultimately reduce jobs, but AI is not good enough yet to replace jobs. I mean, you really have to train and work with it to model it the way you need it to. And I just don't think, I think it's helping, but I don't think it's there yet. Not to suggest that it won't be there, but I think an equal threat is robotization and automation.
And Meredith, let's talk directly about AI a little bit here, because we're counting down to Nvidia earnings after the bell. And one of the big overhangs this specific earnings cycle is whether or not we're going to see a return on investment. And a new detail is basically about the circularity of a lot of these deals that are being signed between these AI giants. And I wonder, from where you're sitting, what you make of that, whether that's a cause for concern in your view as well.
Well, I mean, the circularity argument does not read well, and it doesn't sit well. But leave that aside. I just got back from China on Sunday, and there is so much demand for Nvidia chips there. There's more demand than there is supply, and they're getting them by circuitous routes. But there is so much demand for those chips. So I think that. I think the story's real. I expect Nvidia to have a good quarter. I'd be surprised if they didn't, because again, there's more demand than supply. But I think the AI story is real. I mean, there's so many bad stories about circular investing. I'm not close enough to know how suspect these deals are.
Yeah, well, a lot to talk about, Meredith. We got to get you back for a longer conversation. Really appreciate it. Meredith Whitney there, CEO at Meredith Whitney Advisory Group. When we come back, we're going to continue our focus on both what's going on in the AI space as we count down to Nvidia, as well as the health of the consumer. We're going to catch up with the CEOs of two big brands, Burberry and Bloomingdale's, and get a sense of where they see holiday spending going. That's coming up next here on The Close. This is Bloomberg. Later this evening, Bloomingdale's will unveil its iconic holiday window displays at its flagship store here in New York City. It's highlighting a partnership with the British luxury brand Burberry. And I had a chance to catch up with the CEO of Bloomingdale's, Olivier Bron, ahead of the event to discuss his outlook on consumer spending and his efforts to bring back what he says is the golden age of Bloomingdale's.
I think it's really about coming back to the origins. What we want to build right now with the team is actually rebuilding the next golden age of Bloomingdale's. We heard a lot about Bloomingdale's in the 70s, in the 80s, where it was really the place to go. And actually, right now what we're trying to build is really recreating this destination, Bloomingdale's. And we're an icon, but we have to reinvent ourselves. It's also what Josh is doing with Burberry. This is what we're aiming to do at Bloomingdale's, with one key focus is actually enhancing, bringing back customer experience, customer delight in our stores, and really based on building relationship connections, etc. This is what is making us different.
I want to talk about this particular holiday season. I mean, times are a little bit challenging economically, and there's been a lot of talk about how much capacity the consumer has to spend. Are you feeling optimistic about what people will spend on this year?
I'm actually cautiously optimistic. The trend over the past few months has been amazing at Bloomingdale's, so we feel pretty strong. We feel pretty strong about our customers' feedbacks, about our partner feedback, about the current trend that we're experiencing, and we're building such a great event for this holiday season that we're convinced that it will resonate very, very well with the customer. The customer now, 3 years ago, was all about luxury, high luxury, etc. We can feel that customer behavior changes a little bit, a bit more to high-low, to contemporary, to luxury. And you know what? This is exactly what Bloomingdale's is about. So we feel very, very strong about this holiday.
I haven't had a chance to see the windows for tonight. I assume you've had a sneak peek of what's behind there. What gets you excited for what we're going to see tonight?
I think it's really, what making us exciting is actually, so the moment's going to be unique. So it's about music, joy, and being together. That it's really important. That is really what we're celebrating, especially with what's happening in the world. With some tension, we think that actually this happy together moment, holiday that we're building is really meaningful for our customers. These windows are very, very special because we know we're an iconic building in New York and really want people to come see what's happening at Bloomingdale's, in the windows, on the facade, and then check here what's happening where we are with the Burberry carousel and all the newness that's happening in the store. We're starting the renovation. We started the renovation of this building a couple of months ago, and you can start to see coming to life right now on the shoe floor, on the luxury ready-to-wear floor. We have much more to come, but you can start to feel what's going to be the future of Bloomingdale's in 59th Street.
That was part of the conversation I had earlier today with Olivier Bron, the CEO of Bloomingdale's, and a long-term partnership that they've had with Burberry, which has kind of taken over the store for this big special holiday event that they're kicking off later tonight. The CEO of Burberry was walking through the store, Joshua Schulman. I had a chance to talk to him as well. He's only been at the helm for just a little bit of a time. An American leading a British company, trying to make a comeback itself. Here's part of that conversation. And I've heard your creative director as well as your CFO talking about this idea of kind of dialing up the Britishness, really kind of leaning into what I think most of us associate with Burberry, given the 170-year history, its royal warrant with the king and on all that. Does that resonate outside of the UK?
Absolutely, yeah. Absolutely. You know, there are many luxury brands that have wonderful, beautiful heritages, and they celebrate their heritage, whether it's Italian or French. But Burberry is unique because we are the only luxury brand of scale that has a uniquely British heritage. And so to be able to bring that here against the backdrop of New York City, it's really a dream come true for myself as a longtime New Yorker, and for all
and we
of
should
our
point that out. You are an American, right?
I'm an American, originally
Okay.
from Los Angeles, but spent more than 30 years right here in New York City.
And they let you take over a British brand.
I don't know that they let me take it over.
All right.
You know, none of it's a good point because you know, Burberry belongs to all of us. This is a 170-year-old, almost 170-year-old institution founded by Thomas Burberry. And, you know, so there is a extraordinary history, and we believe there's an extraordinary future. And for 70 of those years, we've had a partnership with Bloomingdale's. And so this is an occasion where we can really celebrate that partnership, Burberry and Bloomingdale's. And we can also celebrate the magic of the holidays right here in New York City.
Of course, later tonight, the day that we're taping this, there will be an unveiling of those windows and big performances. What are you looking forward to most tonight?
I'm looking forward to looking out into the street and seeing the look on people's eyes as they see the unveiling of the windows. I had a sneak peek the other day, and it was a little bit emotional, I have to say. Seeing this uniquely British, uniquely Burberry, uniquely Bloomingdale's story come to life on the streets of New York City.
And our thanks there to the CEOs of Bloomingdale's and Burberry. When we come back, we're also going to talk about the incoming CEO at Target. A lower outlook here, maybe putting some pressure on him as he comes into that seat. A conversation with Michael Baker of D.A. Davison when we come back. This is Bloomberg. Keeping an eye on shares of Target and Lowe's in this big week for retail, a mixed read on the consumer, with Target cutting guidance due to soft demand. Our next guest, well, he says the big box earnings season is here, and he says it is going to be tense. D.A. Davison senior research analyst Michael Baker joins us right now to talk a little bit more about this. And I want to focus in on Target. And I always ask this question of folks here, is what's ailing Target just something that is more reflective of what's going on in the consumer landscape, or is this more of just some of the idiosyncratic issues it's been dealing with for the last couple of years?
Well, it's a little bit of both. Clearly, the consumer has slowed a little bit. We saw a very strong back-to-school period, but in the months since then, for various reasons, September, October, and now even into November, sales have definitely slowed. So Target has some of their own problems. They're losing share to Costco, to Amazon, to Walmart. And they're trying to fight that battle, fighting against the wind being slowing consumer spending. So it is a combination of both. That being said, we did think we heard some green shoots and some good ideas from the new CEO today, but they are struggling amid a slowing consumer environment.
Well, I like the way you phrase that basically they're swimming upstream here. There's a lot of headwinds that they're trying to fight against. But with that in mind, you mentioned you see some green shoots. If you were Michael Fidelki and you're taking over the top job in February of next year, I believe, coming out of these results, what would be top of your priority list to do in 2026?
Well, on the call today, we heard, and I know it's become a cliche, for companies to talk about AI, but it actually sounds like some pretty tangible things that they're doing in terms of using AI to help them really scour the web and find new trends and understand where the consumer's going, to get ahead of those trends, to test with virtual audiences, those type of things. So really the key for Target is to get back that merchandising prowess that they had in the past. They need to be on trend. They need to be early with trends. And so we heard a lot about that. We're seeing some early signs of that. The toy business was up 10%. Sporting goods, music, video games, each up double digits. Those are the types of things that the Target really needs to lean into, those discretionary type purchases. And it seems interesting to use AI to try to get ahead of those trends.
I am curious, too, just kind of looking ahead. I mean, tomorrow we are going to get those results out of Walmart. I mean, they always seem to impress to a certain extent, given their scale and just, honestly, the great job they've done over the years in terms of management. But should there be any concern for investors heading into that print?
The concern for Walmart, we think, is really just about expectations. Everyone expects a very good number. The valuation is at a premium. We think justified. We do like it here, but it's really just an expectations game. Walmart, I think rightfully so, does tend to guide conservatively. So we could see one of these situations where they beat, but maybe not by enough, or where they take a little bit out of the next quarter just to be on the conservative side. And those are the types of things that can impact the stock, in the short term. Longer term, we would buy that kind of weakness all day long because we think they're doing all the right things.
Interesting. And I mean, we're dealing with industry-wide difficulties here, going back to sort of the tense phrasing that you used in terms of describing this retailing environment. Are there any companies outside of Walmart that you think are especially well positioned here?
Walmart, and at least from what I cover, is really the one we would say is best positioned. I also think the warehouse clubs are well positioned as well. Costco and BJ's, who reports on Friday. Now that doesn't mean they're immune to some of the short-term impacts and the slowing consumer spending that we're seeing, but I do think overall the clubs will continue to take market share.
All right, great to get some time with you, Michael. Really appreciate it. That is D.A. Davidson Senior Research Analyst Michael Baker talking about those Target results and, of course, big box retailers overall. Now, coming up on the close, Iron Mountain shares under pressure after Gotham City Research announced they're shorting the stock. We'll discuss with the founder of that firm coming up next. This is The Close on Bloomberg.
3:30 p.m. here in New York. This is the countdown to the close. I'm Romaine Bostick.
And I'm Katie Greifeld. Of course, we're keeping a close eye on shares of Nvidia. The big earnings report coming after the bell today. And Romaine, this is a stock higher by about 39% year to date.
Year to date. It's been a bit of a slump over the last few weeks, so it is higher today. In fact, one of the biggest gainers, at least in terms of point contribution. But also, we should point out, too, there's an entire ecosystem around this company that we have to pay attention to. The power companies, of course, the hyperscalers, and, of course, all these folks building out data center capacity.
A daisy chain and Ouroboros. You could describe it
You love Ouroboros.
I just love steaks.
So, it is a nice word.
Absolutely. Well, we'll bring you those earnings as soon as we have them. But we're also keeping a close eye on shares of Iron Mountain. It's a data center and information management company, down about 2% at the moment, had been lower by nearly 8%. That comes on the back of news that Gotham City Research is shorting the stock, saying that, quote, shares are uninvestable. We should mention that Bloomberg News is out to Iron Mountain for comment, but here to discuss is the founder of Gotham City Research, Daniel Yu. Daniel, great to have you with us. So in your most extreme scenario that you outlined, you could see this stock down by about 80%. Walk us through some of your reasoning for why you feel confident in putting on this short position.
Thanks for having me. Iron Mountain is kind of like being long fax machines, right? Fax machines served a role at some point in time, but we advanced, new technology came, and we have new ways of doing things. Iron Mountain, 90% of the business is paper document storage. While I think 10 years from now, Nvidia might have a very positive future, suffice it to say, I don't think paper document storage might be around in 10 years from now. So one reason is I like to be short companies that might not be around 10 years from now. Second reason is not only that, but they've taken on significant debt over the last 3 years. Debt has grown from $8 to $16 billion. They used to pay only 50% of their profits on interest. Now they pay over 80%. Third is they've increased prices and engaged in business practices that remind us a lot of Valeant Pharmaceuticals. We think these practices are unsustainable, and there's certainly not a way to win hearts and minds of customers.
I'm sorry, Daniel, what practices specifically are you talking about?
Sure, there's two practices that come to mind. One is that they increased prices of some core services year over year by 300%. These are services that they increased just over 1 year, and that's one way in which it reminds us of Valeant Pharmaceuticals. You might remember 10 years ago, there were a bunch of these specialty pharmaceutical companies, and they would jack up prices very aggressively, and the companies became under scrutiny. This reminds me of that kind of activity. Another activity is that former employees refer to their business as a hostage-based business, basically that their customers are like hostages. So based on aggressive price increases, the kinds of which people are now suing them over, we just don't think this is a way to win hearts and minds of customers, especially if they're trying to cross-sell to data center customers.
Well, Daniel, again, Bloomberg News is out to Iron Mountain for comment, and we will bring those comments to our viewers as soon as we have them. But I do want to talk a little bit about the short selling industry overall, because it's been a rocky couple of years. It's been interesting, of course, to see Michael Burry deregistering his fund. You also heard from our Carson Block today of Muddy Waters saying that he now likes to go long stocks, which is an interesting sign of the times. And with so many prominent peers of yours dropping out, do you think that this is going to continue to be a viable industry going forward?
I love that question because we're short Iron Mountain because we're very long the future. We're long human ingenuity and future progress. We think that companies that offer services that solve people's problems, right? They charge this much and they solve this big problems. They have a bright future. Companies that charge this much, right, for doing this little, we think that they're going to go away with the fax machine. So we share in the optimism that many of our peers do. We just think that being short Iron Mountain is being long human progress.
I am curious, though. I mean, just to Katie's question, though, it gets to this idea. I mean, we've seen sort of at least the heyday of short selling certainly ebb a bit. Doesn't mean you guys still aren't out there. But there's been a lot of questions about why you would even want to put your neck out there in this day and age, particularly when you have this whole retail horde that seems to almost just take pride in being able to take people like you down, Daniel. So I am curious as to whether this is truly a viable business model as it stands right now.
Yeah, I think if we avoid the companies where there's cult-like followings, we can do okay. Do bear in mind, we are macroeconomic optimists. We're not short the S&P, right? And many stocks this year, even with the indices up, have been down. Target, Lululemon, Starbucks, you have it. Iron Mountain's been down. We just think Iron Mountain has a long way to go down. So yeah, I'm with you. We're not pessimists about the market. We just like to look for companies that are being disrupted with too much debt, accounting problems, questions from the SEC, and accounting that says that they make money, but we think are losing money.
Well, Daniel, what do you make of the regulatory landscape right now? Because that's some of the things that are cited as pressures on short sellers, given as reason for why you've seen so many drop out. You have regulatory pressures. You also have lawsuits, too, as well. I wonder, how that feels from where you're sitting.
We've actually spent a lot of time before this new administration came to place. We saw the name Paul Atkins, the current chairman of SEC, being thrown around. We did a lot of research and we found that Paul Atkins, who was the SEC chairman 20 years ago, I don't know if many people know that, right? Two things happened. One was there was a great amount of enforcement of corporate fraud. Enron, right? People went to prison. And MCI WorldCom. So that happened. And at the same time, Paul Atkins also deregulated, and made short selling a lot easier. So I think you can have two things happen. One is you can deregulate and make it easier and cheaper for companies to go public, and you can have more corporate accountability at the same time. And so not to say that the past is prologue for the future, but we are at the helm of the same SEC chairman, whereby we saw massive corporate indictments and
I'm sorry. So Daniel, you're saying that there's greater corporate accountability, or we're headed towards a period of greater corporate accountability?
I'm saying that the SEC is led by Paul Atkins, and he has a track record where he was both a free markets guy and an accountability guy. I think he was a kind of believer of capitalism where you reward good behaviors and you punish bad behaviors.
All right, Daniel. Well, we really appreciate you taking time for us. An intriguing, obviously, setup when it comes to the broader state right now of corporate scrutiny, if you will, and of course, your recent presentation at the Sohn conference out there. Daniel Yu is a founder of Gotham City Research, and we should point out Iron Mountain shares only down about 1% or so on the day. We have reached out to them multiple times to respond directly to some of the allegations that Daniel made in his presentation at Sohn, as well as right here on Bloomberg. When we come back, we're going to continue our focus on the tech sector as we count down to earnings from Nvidia after the bell tonight and look at it through the scale of some of the hyperscalers. Alphabet on the move after rave reviews for its new Gemini AI model, and that's reigniting the battle for AI dominance. That's our stock of the hour, and it's coming up next. This is The Close on Bloomberg.
Time now for our stock of the hour. Alphabet shares soaring after its new Gemini AI model received glowing reviews from analysts and users alike, boosting confidence in Google's place in the red-hot AI race. Joining us now is Bloomberg Markets correspondent Norah Mulinda. What an interesting week for Alphabet, of course, getting the Berkshire Hathaway bid there as well. And now this news about Gemini. How does it stack up against OpenAI's ChatGPT, for example?
Right. So we are hearing that people are saying that this is what ChatGPT 5 should have been. So we are hearing a lot of people very excited about what they're seeing in Gemini 3. And of course, you've seen a lot of investors really looking for some big marks coming from Alphabet. I mean, if you think about the fact that the stock was the cheapest of the Mag 7 names coming into this year, it was negative until late July. People really looking for some delivery on a lot of the AI things that they're laying out here. And it seems as though people are very excited here about what's coming out of Gemini 3 as it compares to some of its peers like ChatGPT's 5.
I'm curious, though, too. I mean, we talk about, I get so lost with all these different models and the updates
right.
and all that. Is this just kind of an ebb and flow? I mean, is a sense here that we're sort of fighting for some sort of supremacy, or can they all just coexist?
Can they all just coexist,
Yeah.
right? Well, I think they want supremacy, each of them individually here.
Yeah.
And what we're seeing here from the Gemini 3 is that they're able to really break down complex topics, a lot of coding and things of that nature. When a consumer is asking for something specifically, it seems as though this model is coming out on top of the likes of ChatGPT's 5.
Yeah, and it's interesting. I mean, I haven't tried any of these. I wait for
Really?
technology to come to me. That's usually the strategy I take. But when it comes to AI overall, we've seen the idea that if you fall behind on AI, that's really going to drag down your stock. That's been a problem on and off for Apple this year. What does this piece mean for Alphabet's overall AI strategy and where they stand right now?
Well, this is a great sign for investors. This is a lot of what they were looking for. I mean, if you even look at what a lot of the analysts are saying as they're reacting to this release of Gemini 3, they're saying that this is what Alphabet needed. And it really just underscores the optimism heading into the future as they're really able to try to play a part and actually move ahead of a lot of their competitors here. So this is what investors seem to have been looking for.
I am curious, too. I mean, this gets to the idea, too, when we start to talk about all the different stocks that are benefited from this AI boom. And obviously, Nvidia is number one on top of that. But we've seen Alphabet, obviously, Microsoft has been a big beneficiary. Is this sort of going to be part of that broadening of that AI trade? And not just Alphabet, obviously, but others as well.
Absolutely. I mean, you are seeing this as a broad-based rally on a lot of the names. As I'm even looking at Mag 7 stocks and looking at a lot of the AI names in particular. Of course, you are seeing Alphabet as the biggest performer in the Mag 7 stocks, right, more broadly. But of course, this really just does underscore what the broader trend is here as people are really pushing forward the next steps, the next advancements here as you think about AI more broadly. This, of course, is adding to that collection.
All right, great reporting on a big day for Alphabet. That is Bloomberg Markets correspondent Norah Mulinda. You take a look at the year-to-date performance, Romaine. I think it's interesting that a lot of folks are saying, to Norah's point, that this is what Alphabet needed. But Alphabet is having a fantastic year. It's higher by about 56% on a total return basis, outpacing Nvidia up a pedestrian 39%.
Yeah, it's kind of funny. Just in preparation for the earnings tonight, I was going through all the kind of the superlatives on Nvidia, and it actually really hasn't. I know that weighting makes it a factor, but when you look at it compared to some of the other names and percent increases in stock, percent increases in revenue, and other things like that, it's actually not really as dramatic as I think we make it out to be.
Yeah.
Obviously, being a $4.5 trillion company means we have to pay attention to it.
Yeah, certainly. I mean, you think about where that stacks it up in terms of the S&P 500, it's 8% of market cap of the S&P 500. Alphabet, Microsoft, Amazon follow that, and they're not too far behind, but still by far, or not quite by far, but still a lot of that comes down to Nvidia having to perform.
Yeah, we should point out expectations are high heading into this report. I mean, we're still talking about a company that went from, what is it, 100+% growth to like 60%. But did you see Jensen Huang earlier today? He was down in Washington alongside Elon Musk for some reason, and he seemed pretty relaxed.
Yeah, certainly had the jacket on.
Okay, yeah, no worries.
Yeah, well, we're going to hear from him not too far in the future. This is The Close.
So in terms of the quarter they're reporting now, Q3, the market's looking for revenues of about $55 billion, so that will be up about 57% year on year, and EPS of about $1.25, $1.26. I think more importantly, looking to their Q4, the outlook they'll give, the market's looking for them to kind of guide to around $62 billion, so that would be on revenue, that would be up about 58% year on year, so kind of keeping that same momentum that they're expected to deliver for the Q3. And I guess, beyond that, the market will be looking for anything they can do to kind of provide reassurance that beyond this big hyperscaler investment cycle, there's natural demand coming through from consumers and enterprises to kind of sustain the AI momentum into the midterm.
A nice roundup of some of the expectations for Nvidia's earnings set to hit the wire just in a few minutes when the market closed. I'm Romain Bostic, that's Katie Greifeld. We are counting down to those earnings and, of course, to the closing bell.
Yeah, absolutely. And those Nvidia earnings are going to land in a very interesting market. The S&P 500 managing to climb a little bit more ahead of the close, up about 0.4%. You can see big tech trying to get there as well, higher by about 0.6%, snapping a 4-day losing streak. We know that nerves have been on display when it comes to AI valuations and whether or not we can keep this momentum going like we have for the past 6 months, Romain.
Absolutely. Let's bring in somebody who knows a lot about this. John Belton is portfolio manager and managing director for growth portfolios at Gabelli Funds and includes Nvidia in some of his holdings. And John, I mean, you've seen all the sort of criticisms and skepticisms, if you will, about whether the AI boom has maybe finally hit that final speed bump. But as we head into this earnings tonight, I was taking a look not only at the expectations for, the next quarter, but also listening to some of the things that Jensen Huang has said at conferences just over the last couple of months alone, pretty much about fiscal 2027 for his company, which is basically next calendar year and beyond. And it's hard to really see that growth engine downshifting materially.
Right. Nice to be with you virtually, Romain. I mean, I totally agree. I think what you're alluding to is what Jensen Huang talked about last month at a trade show when he talked about a $500 billion order book for Blackwell and Rubin that spans through the end of calendar 26. That is a massive number. I think that makes it pretty clear to me that for Nvidia specifically, the demand environment is pretty solid, at least through next year. Obviously, the market in this current environment is asking questions beyond next year, but I think for that reason, maybe the numbers tonight, obviously they have to be good, they have to beat, they have to guide above, but the numbers near term may be a little bit less important just because there's such a high degree of confidence in the demand environment currently.
One big issue that will certainly come up, if not in the press release, certainly on the conference call, is what is, if at all, the state of their business in China?
Right. Yeah, I mean, I think most investors, I think, have really tamped down expectations for the China business for now. I think there's just too much uncertainty to really underwrite much in China. We'll see. We know that they've been working on a compliant Blackwell product for China. China, obviously, the government there has much different incentives, and I think is looking at a bunch of different things. Maybe Nvidia is part of a bigger U.S.-China deal. I'm not that focused on China this quarter. I think that's kind of been taken out of expectations, and if anything, it seems to be gravy on top if it does come into the numbers.
And when it comes to Nvidia, the phrase that demand is outstripping supply is used often to explain why the fundamentals for Nvidia still look good. But John, when does that really start to become a concern, especially if you have some issues in the supply chain when it comes to data centers actually standing up the facilities that'll be able to outfit that supply?
Yeah, there seems to be quite a few bottlenecks out there right now. Access to power being one of them, access to data center shells being another. But I think for Nvidia, it is, to your point, very clear that demand outstrips supply. That's why you've seen their revenues have grown in such a linear fashion sequentially over the last several quarters, because revenue is really a function of how fast can the supply chain stand up product. It's not a function of how robust is the demand environment. I think that situation is going to continue. We're coming off an earnings cycle where hyperscalers really significantly again increased their CapEx expectations into next year. So I think the question for Nvidia, for the AI trade, as people say as a whole, is when does the cycle peak and how high is the peak? Katie, I was listening to the segment before. The fact that you have not tried any AI service is pretty amazing. Maybe when you try an AI service, let me know, because that might mark the top.
There you go. I'm sure unwittingly I've used it, but again, I try not to seek these things out. But let's talk a little bit about the deal frenzy that has been going on in the AI space. Of course, Nvidia, no stranger, has signed onto plenty of these things, but so too have their competitors. You highlight, for example, AMD signing deals with OpenAI, a couple more hyperscalers. How much of that is a threat potentially to Nvidia longer term? Because they've built this fantastic moat. They have this clear first mover advantage. Eventually, a pessimist would say that has to erode.
Well, I'd start by saying definitionally, Nvidia is going to lose market share going forward. They've got close to, say, 95% of the AI accelerator market today. So competition is inevitable. It's coming. I think a lot of these recent deals, again, speak more than anything to what a robust demand environment we're in. I think the fact that you've seen AMD be able to strike a couple really large deals with the likes of OpenAI, Oracle, I think it just speaks to the fact that the model companies, the cloud companies, they are looking for as much compute infrastructure as they can get their hands on right now, because the end user demand is so robust. I do think, for Nvidia, the competitive environment, you have AMD, you also have Broadcom. I think what Broadcom's doing is very interesting in their custom accelerator program, basically designing custom chips for some of the largest users of the chips. And I think, that to me, it's always going to be a niche offering. It doesn't really compete head on with Nvidia, but I think there's a place for that in the market.
All right, John, always great to get you on. Always great insights. John Belton, portfolio manager, managing director for growth portfolios at Gabelli Funds. Counting us down to those earnings, Katie Greifeld from Nvidia.
Yeah, and not too much longer to wait. It's, again, it really feels like it's taken all the oxygen out of the room. But I like your point at the beginning of the show that
I'm glad.
Walmart, too, very
point.
important, but maybe not the thing to talk about at 357.
It's important from a fundamental basis in terms of moving the market. As you said, I mean, the biggest weighting, biggest company in the world, of course, it is going to sort of suck all the energy out of the room. But we should point out, too, we're trying to sort of divine what this past quarter shows. We should point out we've heard from all the hyperscalers. So we've heard from basically the majority of their customers. And we've seen the growth rates, and we've seen, more importantly, the CapEx forecasts from some of them. So maybe that bodes well. Stick with us. You're about to find out with our global simulcast.
The Closing Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close, starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick here with Katie Greifeld, taking you through to that closing bell. It's a global simulcast. Carol Massar, Tim Stenovec, they join us now, as they do every day at this time. Welcome to our audiences across all of our Bloomberg platforms, television and radio, our partnership with YouTube, as we parse the most crucial moments of the day, and more importantly, push ahead to earnings from Nvidia.
Yeah, I'm looking at Nvidia. I've been kind of focused on it all day here, wondering how it was going to trade ahead of earnings. Right now, Romaine, it's up about 2.9%, but we'll see whether or not we get enough from the company to keep the enthusiasm going.
Okay, so where is it trading at right now? Roughly $186 a share. Okay. Yeah. $270 is the price target over the next 12 months that Angelo Zeno has on the company's stock.
That's quite a bump.
He thinks it can get there over the next 12 months. We'll see what happens today.
We'll see what happens. You take a look at what the options market expects for Nvidia after earnings. The implied one-day move right now is just under 7%. And stakes are high, of course, but it feels like, I don't know, maybe it's an easier environment to report into right now, Romain, given that you have seen this pullback.
Yeah, well, you should also point out in the option stuff, if you ever looked at the pricing on some of those puts and calls, particularly on the calls, it's a big reason why you're seeing kind of that lower sort of implied number there as a lot of people on the sidelines. But it also gets to the idea what John Belton was just telling us, Katie, this idea that what happened last quarter and even the guidance for the current quarter is probably a lot less consequential than what Jensen Huang has to say really about the next year and beyond.
So always about that commentary from Jensen, no doubt about it, Romain.
The closing bells here in New York on this Wednesday afternoon. A bit of a turnaround from what we've seen the last couple of days as the market awaits a couple of key earnings, including from Nvidia and Palo Alto Networks. The Dow Jones Industrial Average higher by 41 points, or roughly about 0.1% on the day. The S&P adds about 25 points, or 0.4%. The NASDAQ indices each up roughly about 0.6% on the day. The Russell 2000, it's sitting this one out unchanged on the day.
Hey, back to the S&P 500 I go. Most names in the index lower despite a slight gain in the S&P index overall. Katie, 305 names to the downside, 194 gaining ground on this Nvidia Wednesday, and we've got 4 unchanged.
Yeah, let's take a look at the circle and the sectors. Similar to, makeup to yesterday, you have 6 sectors in the green, 5 in the red. Tech, though, participating higher by about 0.9%. Communication services, materials also having a good Nvidia Wednesday. What didn't do too hot today, energy down by 1.3% as a sector. Utilities and real estate also bringing up the rear.
All right, guys, let's get to some of the individual gainers as we await those Nvidia earnings. Lowe's up about 4% in today's session. Throughout the day, we did see it as a top gainer in the S&P 500. The retailer reported profit that topped expectations, helped by consumer spending on home renovations. Reported positive same-store sales growth for a second consecutive quarter on strength in its digital channel and in-home services. Adjusted its full-year profit target to approximately $12.25 per share this fiscal year, accounting for uncertain economic conditions and its recently closed acquisition. So an outperformer in that one. Hey,
have you ever been in a Lowe's?
I'm more of a Home Depot kind of gal, but when I first bought my home, I was in there all the time.
Oh, yeah.
I loved it.
Oh, man.
I loved it. Yeah. It was kind of crazy. Have you ever been in one?
Yeah, absolutely. Yeah, when I bought my, like everyone who buy when you first buy your house, you basically spend every weekend going there.
I knew all the aisles.
You get everything you need. You get back to do your project and realize I have to go back because I forgot those screws, and then I go back because I forgot that.
How many times?
That's how they get you.
Then you have to hire the person to actually do it.
Right.
You try to do it, and you run into some roadblocks.
How many times I go down an aisle and I just kind of feel like I'm staring at everything? Like, it's just kind of crazy. Hey, I know we're focused on Nvidia, but Alphabet, you got to mention that one. Up about 3% in today's session. Earlier intraday, soaring the most in 2 months. A wave of glowing reviews for the newly released version of its Gemini AI model, spurring investor confidence about the company's position in that ever-changing tech landscape.
Have you downloaded that yet, Katie?
No, we were just talking about this. I don't seek technology out, so I haven't used Gemini. I haven't used ChatGPT.
Ever?
But I mean, again, unwittingly, I'm sure I've used it in some sense, but I don't know. I can't access it on the Bloomberg computer.
She still reads like a physical newspaper.
You can access it on the Bloomberg computer.
I know, but you need to take a course.
Yeah.
And so I'm not going to do that. But anyway.
Just a quick aside.
What?
Do you know how long it took me to get Katie to use Google Docs?
Wow.
I still don't.
Tell
I
us
still
more.
don't.
Yeah,
So 5 years, I guess, is the answer.
We work at Bloomberg. We have the note on the terminal anyway.
I know the note is better.
Google.
Yeah, come on.
No, it's not.
Is it?
Sorry.
It is.
No.
The note is better.
No, Google Docs is a gift. It's a gift that keeps on giving. Hey, by the way, shares of Google, guys, they're up almost 55% this year, and I believe they are the best performing member of the Mag 7. So put that in your something.
What?
In your pipe and smoke it. Hey, Constellation Energy, I have to mention that one. Definitely an outperformer in today's session. Number one gainer in the NASDAQ 100, up 5.3%. Government, U.S. government planning to buy and own as many as 10 large nuclear reactors, projects that could be paid for by a $550 billion pledge investment fund being offered by Japan. So, all of these, of course, they own 3 Mile Island. We had some news on that yesterday about getting $1 billion in backing from the U.S. government on a reopening. So this was a big outperformer in today's session.
Well, do you want to start with some energy when it comes to underperformers? The worst performer in the S&P 500 today on a percentage basis, Eversource Energy. Shares had their worst day since 2020 after regulators in Connecticut denied its request to sell its subsidiary, Aquarian Water Company. This rejection was due to concerns that the sale could double household bills and decrease economic regulatory oversight. Regulators said the proposed deal, quote, does not meet managerial suitability and responsibility requirements in a manner consistent with the public interest. Shares once again fell by more than 12%. Also, keep an eye on shares of Blue Owl today, down 0.9%. Blue Owl Capital calling off a merger of its two private credit funds after scrutiny over potential investor losses sent its shares tumbling. This deal was supposed to be between Blue Owl Capital Corp, which is a publicly traded one that's under the ticker OBDC, and then Blue Owl Capital Corp 2, that's non-traded, according to a statement Wednesday. The initial terms of the agreement barred investors in the private vehicle from redeeming their capital until the merger closed. The firm did cite current market conditions and will reevaluate its alternatives. And finally, some M&A news today, moving stocks in two different directions. Abbott Laboratories falling 3% today after Bloomberg News reported that it's nearing a potential acquisition of Exact Sciences Corp. in what would be its largest deal in nearly a decade. People familiar with the matter said Exact Sciences closed higher by 23.7% today. Their diagnostic tests include Cologuard, which helps screen for colorectal cancer. It's the second leading cause of cancer deaths in the U.S., but it's been used to screen for colorectal cancer some 20 million times since receiving FDA approval back in 2014.
All right, a quick check on yields. Not a whole lot of activity there. You did actually see a bit of a rise on the day, up basically about 1 to 2 basis points, depending on where you're the curve. In fact, the whole curve more or less shifting parallel here on the day. But honestly, guys, today really is a day about tech, about the AI spend, and about Nvidia. There was an interesting story just earlier today how the White House is actually like kind of pushing Congress to take out some provisions from a new defense spending bill that would restrict AI chip exports. And of course, this is going to be a big issue that Nvidia is going to have to address either tonight or at least in the future, because basically its ability to sell those high-end Blackwell chips to China, at least for right now, is basically a no-go.
Wait, so did you just do our story?
I think so.
You did.
Well,
But that's cool.
I pass it back to you then.
I never know what you guys are prepared for, Carol, so I just try to help out.
Any
We're always
comments?
prepared to talk about Bitcoin, Romaine.
Okay, all right.
So,
sure
Right,
thing.
as-
Do you have any comments on chip exports, or since it was your story?
You know what? The one thing we did say, and this, I think some of this initial reporting was coming from Axios, it's hard for me to keep track of where we are in terms of chip exports, who's getting what, who's not getting what. I don't know.
Well, and I also
There is
think
data
that,
on that.
imagine if you were the CFO of a company that was trying to figure out, okay, how much are we going to be able to sell in certain parts of the world of which product? And because so much of that depends on the regulation. So if we can't plan for that, then, how do we figure out how much we're going to spend in other areas?
Well, we were just talking with John Belton over at Gabelli, and at least the point that he made, and to paraphrase it poorly, was that when it comes to Nvidia and China sales, that it's less of an issue here, that a lot of that is well socialized at this point, that China is a difficult market. But longer term, I mean, if you don't have access there, that's a little bit of an existential problem.
Well, and I think it's also interesting, at least according to the original reporting, is that it was about, fulfilling purchases of U.S. customers before exporting to what they call countries of concern, including China, which again shows kind of the China-U.S. back and forth of, yeah, we're getting along, we're not getting along. I don't know. It's just kind of interesting.
Nice job, Carol.
I just want to know, did you get the pinky ring yet?
Not yet, but I'm waiting. Christmas is coming.
Tattoo? Tattoo?
Tattoo, yeah. Okay. I told you I got it. She got hers on her neck. I got mine somewhere else.
All right, guys, this has been fun. Off to Nvidia we go.
I'll show it to you one day.
In front of a camera, preferably.
Oh, my God.
No, where it is,
That
the
would be
cameras don't shine.
must-see viewing. All right, that's a wrap. Our cross-platform, radio, TV, YouTube, Bloomberg,
Tim,
Ventures.
do you want to see it?
I have to go.
Off to Nvidia, guys. Only about 10 minutes away. Katie and Romaine continuing there, of course, on the close on Bloomberg TV. Tim and I continuing on Bloomberg Business Week Daily right here on Bloomberg Radio. We'll see you again, same time, same place tomorrow.
All right, time to get serious. We're going to take a quick break here, get some water, and get you ready here. The countdown clock begins. Earnings for Nvidia out momentarily. No better coverage in the world than right here on Bloomberg.
The countdown is on. Everything you need to get the edge at the end of the market day. This is the close.
Welcome back to The Close. I'm Katie Greifeld.
And I'm Romaine Bostic. A bit of a rebound than what we saw over the past 4 sessions for the major U.S. indices. Fractional gains to be sure, but a little bit of optimism as we head into that big earnings report momentarily from Nvidia. The S&P 500 up 0.6% on the day. The NASDAQ 100, up 0.6% here on the day. Of course, a big boost coming from Nvidia. You see the Philadelphia Semiconductor Index adding about 2%, but softness in the software space, and that's something to keep an eye on software softness once again, when it comes to the crypto space. That has been a big part of the momentum trade. We'll see whether Nvidia changes that momentum in just a few minutes' time.
Absolutely, keeping a close eye on those earnings. Let's take a quick look at some other movers today. We start with Block, up about 7.6%. They had an investor day today, delivered a better than expected outlook. Alphabet, as we've been talking about, rave reviews for its Gemini AI model, boosting shares by about 3%. And then we end with Nvidia, higher by almost 3%. And that is our top story this hour. We are minutes away from those Nvidia results, and analysts expecting that the chip behemoth will show more than 50% growth in both net income and revenue in its fiscal third quarter. Now this, as investors grow increasingly skittish about AI spending, with concerns really mounting over the valuation of AI stocks and the circular nature of financing AI deals. We'll hear from CEO Jensen Huang a little bit later today at 6:30 p.m. Eastern right here on Bloomberg, but just about 7.5 minutes to go until we get those results, Romaine.
Absolutely. And just a quick update here. We did get some earnings just a couple of seconds ago out of Palo Alto Networks, this network security company here. Those shares lower in the after hours trade right now, primarily on some guidance here that looks to be just a little bit light here from what the street was expecting. Meanwhile, we count down to those Nvidia earnings. Let's bring in Lindsey Bell into the conversation. Chief Investment Strategist at 248 Ventures. All right, Lindsey, expectations for growth, as we know, revenue growth are high. Expectations for profit growth also high. Looking ahead, though, to this quarter and, of course, the quarters beyond, Lindsey, what do you want to hear out of this company?
Yeah, you know what? I think it's really going to be all about what they tell us about 2026, because the next quarter is likely to be good and the guidance will probably be fine. But clarity on 2026, AI demand, whether that's from enterprise or on the sovereign front, people want to know that we want clarity on competition, right? We heard AMD, their backlog is growing in the AI chip department. There's other custom AI chip manufacturers out there as well. And then I think we remembered this afternoon that the export ban and the China expectations are another area that we do need to keep in mind as we're thinking about Nvidia shares going forward.
One of the bright spots that bulls are trying to hold on to is the idea that we've heard a lot of earnings out of the hyperscalers, from also some of the chip equipment companies and fabricators and suppliers like TSMC and AMD. And that seems to suggest, at least based on their results, that there is still a lot of momentum here when it comes to the AI infrastructure build out.
Yes, I think that combined with even what Jensen Huang said just a month ago about 500 billion in backlog for the rest of calendar year 2025 and 2026 for this company, it certainly bodes well for demand going into the future. But I think we still want clarity, because we remember for this quarter, guidance took out China altogether. So I think there could be potentially a bump there. But then the other side of the equation is costs, right? So we want to know that margins can stay in the 70%, maybe mid 70% range, with supply constraints and the cost for certain raw materials and things like that. So there's going to be a lot for the company to talk about here.
Let's talk a little bit more about China, because we were having this conversation with John Belton and then with our radio colleagues, that the fact that China has been taken out of guidance, again, that's been well socialized. It feels like it's been digested, just taking a look at shares. But longer term, I mean, how do you think about that element, Lindsey?
Yeah, I mean, I think it's an important component, but it's not the end all be all for this company. Look, a lot of their customers, 40% of their customer base is still the hyperscalers. So I think, to me, it's more of a cherry on the top than anything else for this company and for the stock performance going forward.
Well, you mentioned their customer base, a lot of that coming from the hyperscalers. Now and again, you hear people expressing concern that they do have a pretty concentrated customer base, at least relative to certainly a lot of other companies. And I wonder how you think through that, Lindsey, whether that's something you'd like to see them diversify, or are you comfortable with who they have on the roster?
I think I'm comfortable with who they have on the roster because this is, when you look at the vertical of where the semiconductor chips, they go into the hyperscalers and the hyperscalers, it bleeds out into other parts of the economy. So I think that this is just, it's the nature of their business. And so I think that as long as those hyperscalers are spending, the demand remains solid, which we are seeing, and we expect to hear more from Jensen Huang today about the demand. Like I said, I think that we can be comfortable with that.
I am curious. I mean, Lindsey, you are a holder of Nvidia. I am curious about some of the other stocks in the AI ecosystem, whether it's the hyperscalers, whether it's the neo clouds like CoreWeave, whether it's the hardware server makers like Dell, or whether it's some of the power companies like Constellation and Vistra. Do any of those appeal to you? Are you holding any of those as well?
I'm right now, I think a lot of the space can appeal to you. And I think that this is, again, this is the AI trend started with the semiconductors. It's evolving into other parts of the market and the entire economy. I think the energy sector is a very interesting sector with regards to AI demand, but there are constraints there. And I think that they've run quite a bit. So it could be potentially hard to get into those names nearer term. I'm looking at the old school names too, Cisco, Intel, IBM, also as potential beneficiaries of AI on the earlier side for them. So I think that there's definitely room to run. We're still in the earlier innings of this AI trend.
I think that's an interesting point. I mean, you bring up Cisco. It took, 25 years for them to get back to their dot-com peak. Sort of one of those names that maybe looks still inexpensive relative to some of their peers. How much of there is that in this market that you can pick and choose and still bargain shop when you're talking about this very, very hot theme?
I think there's more than the sector gets credit for in general. I mean, if we're just going to look at Nvidia right now, it's trading at a 28 times multiple, which, by the way, is a discount to its 10-year historical average of about 36 times. Semiconductors right now are trading at about 30 times in general as a sector. So I think there is value to be found, but I do think it is a stock picker's market, and you have to go on a stock basis by stock basis. I mean, if you look at the hyperscalers, even in general, they're starting to see different individual trends in each one of those. Some of them are more diversified than others. Others rely more on the AI trend going forward. And so I think that there's different ways that you can play this for certain.
Yeah, we should just remind everybody, we are awaiting those earnings momentarily from Nvidia, the conference call, the webcast, if you will. That will be at 5 p.m. Eastern time. We've already heard a lot, Lindsey, from Jensen Huang at various conferences over the past few weeks, including today down in Washington. And of course, he talks much more lawfully, not so much about what's happening in the current quarter, but really what he sees as, how the transformation over the next 10 years and beyond, if you will. Is this going to be that transformative company? Are we still going to be talking about it the way we are today, 10 years from now?
I think it's a good question. Peter Thiel brought this point up more recently as well, is that, in Silicon Valley, they don't even really make semiconductors anymore. They don't do the hardware. It's more about the software. And that's because hardware over time typically becomes a commoditized product. And you're starting to see some of the hyperscalers even looking at creating their own custom AI chips. And so the question is, do we get to that point? I don't think necessarily near term we will. I think Nvidia is going to continue to be the dominant player. AMD is starting to make inroads there. But it's certainly going to be something to watch. So I don't know about the 10-year question.
All right, Lindsey, got to leave it there. That is Lindsey Bell. She is Chief Investment Strategist over at 248 Ventures, Romaine. Nvidia
earnings crossing the wire right now. Revenue in its fiscal third quarter, $57 billion. The street was looking for $55 billion and change. EPS coming in at $1.30 a share. Gross margin, 73.6%. That data center revenue off of the high line number, $51.2 billion. That is also a beat over what the street was looking for of $49.34 billion. For the fourth quarter, the company sees overall revenue of $65 billion, plus or minus 2% off of that number. In the fourth quarter, the company says that it also is looking to excuse me, that fourth quarter guidance that we just gave you, that is accurate, $65 billion plus or minus 2%. Katie Greifeld, the street on average was looking for about $62 billion. But if you take that 2% plus or minus, of course, that's pretty much around what the street was looking for.
Yeah, you take a look at the reaction in shares right now, higher by about 3.6% after hours. The headline that went red on the Bloomberg terminal, that third quarter data center revenue coming in at $51.2 billion. Again, the estimate there was for $49.3 billion. Fourth quarter revenue, the look ahead seems to be higher than expectations as well, delivering a range $63.7 billion to $66.3 billion. The estimate had been for just under $62 billion. Shares continuing to climb here, Romaine.
Some commentary from the press release from Jensen Huang saying, and quote, Blackwell sales are off the charts and cloud GPUs are sold out. He also says, in his words, that compute demand keeps accelerating and compounding across training and inference, with each growing exponentially. Those are the words of Jensen Huang in that press release, Katie.
All right, let's get some analysis now from Matt Bryson. He is Managing Director of Equity Research over at Wedbush Securities, covering hardware. Pleased to say that Matt joins us now. You've had a couple of minutes to read through these results. It looks like on most measures and the look ahead, we're seeing a beat, and you can see that in shares. Matt, what is your reaction?
Yeah, I think they hit the buy-side expectations exactly. So what we'd been hearing beforehand, $57 billion on the top line, and then guide for mid-60s is kind of what people wanted, and they delivered.
And let's go through some of the specifics here. We mentioned the third quarter data center revenue, $51.2 billion ahead of expectations, as Romaine just walked us through. Commentary from Jensen Huang that when it comes to Blackwell sales, in his view, they are off the charts. What do you think is most important here? What was the one metric that you really think that they needed to hit?
I'm going to put two out there for you. I think the Q4 guide, so getting to that mid-60s number, it talks a little bit to concerns that spending might be peaking, right? It certainly doesn't look it from what they're guiding. And then the other piece is mid-70s gross margins, right? Colette's been telling us for the last few quarters that that's what they were targeting for Q4, and it looks like they're going to deliver.
And Colette, you're referring, of course, to Colette Crease, the CFO at the company there. When it comes to the other chips, I know we were all focused on Blackwell. I mean, of course, they're giving us an update on H2O as well, saying that those sales were also significant in the most recent quarter. I am curious, Matt, as to where you want to see kind of the balance between the various companies' products and divisions. I know they have sort of the winning horse right now, but at some point this industry shifts, and I am curious as to how you want NVIDIA to shift with it.
So I think from their perspective, one of the ways that they can grow revenue without necessarily needing the TAM to grow as quickly is move more into the products that are adjacent to their GPUs. So if they're shipping more Grace and more Vera, that adds to the revenue without necessarily customer spending more. Same thing with the networking side of things. So I think seeing better growth there is positive for the company. I also think that if you look at that next wave of spending, so if we're talking neoclouds, if we're talking sovereign data centers, they are more likely to buy the full stack of NVIDIA solutions. And so from my perspective, they're to some extent going to benefit from that setup.
And we should point out that most of those neoclouds are rallying here in the after-hours trade along with NVIDIA. And Nibius up about 4% here on the day. CoreWeave up about 3%. Matt, when you next hear from Jensen Huang later tonight, and I know he'll have some grand projections, grand ambitions for where he sees not just NVIDIA going, but as he says in the press release, the idea of just the AI ecosystem expanding. What is most important for him to say?
A lot of what he says, it's hard sitting in my seat to fully validate. So when they talk about there being a $3 trillion market, it's great to hear. It's optimistic, but it's 2030 is forever. So I guess the two things I'd love to hear: one, that Vera Rubin's progressing well. Right, it was a little bit of a struggle with Blackwell. If they execute better on Vera Rubin, that's great. And then, secondly, more inference. Right, if you step back a year, The concern was there weren't dollars being generated from AI. I'm running into more inference applications. I'd love to hear him kind of validate what I've been seeing, because inference drives revenue, which then obviates some of these concerns around is there enough money out there to pay for more data centers.
Right, and of course that call less than 34 minutes away. Matt, before we let you go, I do want to talk a little bit about China. We know that there's been restrictions on shipment of those advanced chips to China. Again, that's largely not locked Nvidia out of that market. That doesn't seem to be a problem right now. You take a look at shares, but longer term, how are you thinking about that dynamic?
So one of my concerns there had really been that if you created this bifurcated state where you had China AI and US AI, that to some extent Nvidia might end up losing, particularly if they weren't allowed to ship to other regions that were China adjacent or where chips might somehow gravitate into China. It seems like the U.S. administration, today told you that they're not going to sign or they're not in favor of that act to basically advantage U.S. customers. And then one of the things we've been hearing about China is that they're having a hard time manufacturing enough chips. And so, well, it's a loss not to be able to ship into China. Mm-hmm. It feels like Nvidia is doing a great job dominating the rest of the world market.
All right, Matt, we'll let you get back to work there. Of course, as we continue to parse these earnings as they cross the wire, Matt Bryson, Managing Director of Equity Research at Wedbush Securities. The numbers are out for Nvidia in the most recent quarter, a beat and a slight raise here on their guidance for the fourth quarter and beyond as we await that earnings webcast at the top of the hour. Our next guest says valuations across the AI ecosystem are a bit stretched. Sylvia Jablonski joining us right now. She's the CEO and CIO at Defiance ETFs, an investment company that specializes in issuing ETFs. Sylvia, great to have you here. I just want to point out, too, we know the weighting of Nvidia and just keep an eye on futures. We're getting a modest bump here, I think, at NASDAQ futures, indicating we'll be about maybe 0.3% higher than where we closed out the session. But there's going to be a ripple effect, whatever direction Nvidia goes in the cash session tomorrow, through all of the indices, and I would assume dang near every ETF out there, which probably has some piece of Nvidia in it.
Yeah, absolutely. This was very much the market event that we've been waiting for, with the market having pulled back the last couple of days. I think that, all eyes were on this read right now, and it was kind of going to be the thing that resurrected the market and got it, going back upward into its bullish momentum. And, I think the earnings outlook is great, right? Because the doubt that investors have had, which I think has led to the pullbacks, is AI, tangible? Is it worth what companies are paying for it? Is it worth the CapEx? Is it worth the valuations? And here's, Jensen Huang and Nvidia delivering this great earnings result, a great outlook for Q4. Yeah. The demand is still there. Compute is still there. The AI trade is very much on.
I'm going to ask you a very loaded and cynical question, and it's really about the importance of Nvidia to the market. And I know this is a silly question given that it's 8% market weighting, but I was kind of surprised looking back at the stock's underperformance, relatively speaking, to the rest of the market over the past few months. It's not necessarily been the barn burner that it once was. And I wonder if that is almost a healthy sign that the market is finding a way to move on from Nvidia, not necessarily away from it, but the idea that there is a bigger AI trade than just Nvidia and Microsoft and Alphabet and whoever else you want to throw in there.
Yeah, Romain, you make a great point. I think that Nvidia was AI, right? It was the AI trade post the ChatGPT moment. It's what everybody piled into. You got that triple-digit performance on this stock, and it continues to do well. Now it's settling in. There's only so much higher that you can keep raising the bar to have these blowout expectations. They've blown it out of the water for the last 2 years or so and continue to do so. But I think that the shift now is on the next generation, the next derivative of AI, which is AI-powered infrastructure. And you hear a lot of talk about that. And if you look at some of those companies like Constellation today, got a little bit of a bid talking about the reinvigoration of 3 Mile Island and things like this. So I think it's going to be a lot of what powers and builds the infrastructure. And NVIDIA will surely play a part of that. But I do think that it's going to expand to some of the picks and shovels in that space as well.
So a broadening out, perhaps. I do want to ask an existential question, because I was reading a colleague from our Bloomberg Opinion colleague, Dave Lee, and he recalled these comments from Peter Thiel, who told the New York Times earlier this year that when it comes to AI, it's more than a nothing burger, but less than the total transformation of our society. So maybe it's not the internet, maybe it's important still, but maybe it's not going to absolutely change everything. And when you think about this AI trade overall, how important it's become to not only our stock market, but our economy, how big is the risk that maybe it's not going to be as big as everyone seems to think it is?
I mean, I think that the potential for AI is actually quite large. You know, if you look at what's happening now and what's actually there and tangible, if you think about, for example, unmanned drones, it's changing the way that we think about aerospace and defense, right? It's changing the outcome of drug trials. It's changing essentially the way that we live and work with some of the AI tools that we have at our fingertips already. Now imagine when it actually starts to feed into earnings and feed into the bottom line of some of the sectors outside of just tech and semiconductors. I think you'll really start to see that play out in GDP, and it'll be one of the forces behind GDP growth. So I do think that we are in the infancy of AI, and I think that this is just the beginning. And then it keeps going, right? You have supercomputing, quantum computing. This is just stage one.
And I guess that brings me back to timelines. Like you said, you know, the trade is broadening. Now it's more about AI-powered infrastructure. Some of those other potential forces that you mentioned, when it'll make an impact when it comes to drug trials and the like. Are those investable themes yet, or are we just too early?
I think they are investable themes. I think these are the opportunities to get into that space now. And we're starting to see it. A lot of the volume and trading flow is going into some of these AI energy related companies. It is going into the AI infrastructure types of plays. We have, you know, an AI infrastructure ETF. We've seen a lot of flows into there. So I do think that investors are positioning themselves for that next derivative. You know, that being said, you both started out talking about this. Nvidia is in every ETF almost, right? It's 8% of the S&P. It's a move in Nvidia is the size of the GDP of a small country. So this stock certainly matters and will always be, you know, a key and core player here. But I do think that the trade will expand.
Any potential risk specific, to the Nvidia trade that you're at least keeping an eye on?
Yeah, I think it's the overall AI tech trade, right? We saw what happened to the market in the last couple of days. There wasn't this massive catalyst. There was this pile on about concerns about margin, perhaps data, perhaps Fed not cutting, stretched valuations. You know, the consumer is going to continue to expect, again, these blowout earnings.
Yeah.
And if we don't get them, and if we don't see that, you know, CapEx translates to revenues and income, perhaps you have a risk in that trade.
All right, Sylvia, really great to get some time with you. That is Sylvia Jablonski. She is CEO and CIO over at Defiance ETFs.
And we should just point out, futures now really starting to pick up a little bit of steam. Seeing NASDAQ futures up more than 1.3%, and the triple Qs right now up about 0.8%. And also just a reminder, too, for our audience, we are waiting to hear from Jensen Huang at the top of the hour in his webcast. We also have an interview with Jensen Huang later tonight right here on Bloomberg at 6:30 p.m. Eastern Time.
Absolutely. Looking forward to that conversation. Nvidia shares higher by almost 4% in after hours right now. And when you think about, of course, the AI industry, it's also the promise of advanced robotics that is a key driver for Nvidia's business in its position as the world's top AI enabler. Let's dig deeper into the results with a thought leader in the realm of AI. It is Andrew Ng. He is founder of Deeplearning.AI, also a managing partner at AI Fund. And so when you think about advanced robotics, for a lot of folks, that just means robots basically serving humans, Andrew. But give us a little bit more detail there. When you think about that promise, what does that actually mean?
Over the last few years, a lot of AI advances have been in the text processing, maybe image processing ranges. And I think there is excitement and buzz in robotics, but it is a little bit behind the others. But from what I'm seeing, progress in robotics is faster than there's ever been. A lot of investment in humanoid robots, exactly when and how it will become valuable, maybe that still remains to be seen. But I'm bullish about the future.
Bullish about the future. Talk to us about costs, though, whether when you think about humanoid robotics in particular, whether that's something that's going to be scaled, what that timeline actually looks like.
I have to say it's hard to say, but there's one question I think has been on the mind of a lot of investors, which is there an AI bubble? And robotics is a little bit further in the future, but speaking to is there an AI bubble today, let me share with you my perspective on that. I'm going to make a nuanced answer because this is important. I think we're underinvested at the application layer. There's a lot of CapEx going into the AI model training, data center build-outs. But for that to work out, the applications built on top have to be even more valuable. And I see a lot of investment opportunities, signaling room for growth at the application layer. So I'm not worried about a bubble there. a lot of concerns about the CapEx investment. It is my view. What I'm seeing is that there's a lot of unmet demand in AI inference. So people train AI models that cost hundreds of millions of dollars or more, and then use the models to serve up results. That's called inference. There's a lot of unmet demand in inference, so we definitely need more data centers built out for that. I'm not worried about lack of demand there. It's possible to still have people lose money if we overbuild, but there I think I feel confident about. And the only question that remains is for all the CapEx going into AI training, are we going to overbuild for that? That one I think is a more of an open question, because with, say, a lot of Chinese open models being released that are very effective, what if you invest a lot in training, but the value is degraded by open competitor?
Well, I am curious about that too, just the kind of the distinction between the way that the U.S. is kind of building out its AI capabilities, U.S. companies, I should say, and what we're seeing in China, which seems to be more of an open source type of model. And I think some people have kind of compared it to, say the closed Apple ecosystem versus, say, Android. So far, we're starting to see a lot of companies switch to models from Chinese makers because obviously it's just cheaper and in some cases even free. Does that become an impediment for U.S. progress?
So I think that China's release of many very high quality open models, it gives China a lot of soft power, because if someone asks a question, those models will naturally reflect, say, China's perspective. And it does call into question why the U.S. we can't seem to get our act together to release more open models. By the way, just like 10, 15, 20 minutes ago, my friend Yana Kun, who was founding director of FAIR, Facebook's AI research lab, just announced his departure.
Yeah.
And I think Meta, for a period of time, did really good work releasing open models. But now we feel like we're a bit behind China, and that's unfortunate, because that really levels the playing field, gives researchers and developers access to tools they can then use to build amazing applications on top of.
I'm glad you brought up Yana Kun, because it's kind of interesting to see some of these, really pioneers in this space who are affiliated, at least who are currently affiliated with some of these large companies, kind of starting, branching out onto their own. And I am curious, Andrew, as to what you're seeing in terms of kind of that creativity, that innovation coming not from these gigantic, $100 trillion companies, but the idea of companies that we don't know about that maybe are going to be a little bit more nimble than some of these behemoths.
One interesting thing that's happened is that some of the behemoths have become very nimble, and there is a mix of more nimble versus less nimble behemoths. But whereas with the rise of the internet, some of the behemoths move more slowly, there are big companies that are surprisingly nimble these days. Having said that, we're very technology wave. I think there's opportunity for the behemoths to transform, and also opportunities for new entrants to create a lot of value. But to me, there are so many applications that we can now build. One thing I see in what we can now build is with AI coding, we can write software faster than ever before. And the software is more powerful than what anyone on the planet could have created even a year ago. So that set of opportunities to build new stuff and do it really fast exists in a way that didn't before. And both startups as well as some behemoths are moving to take advantage of this to invent new things.
Andrew, always a pleasure talking to you. Andrew Ng there, he's the founder of Deeplearning.AI, managing partner at AI Fund, and one of the pioneers in the modern AI race. All right, Katie, of course, Nvidia shares are holding on to their gains as we await that webcast at the top of the hour. But a lot of other big names moving as well. Applied Digital, Nebius, CoreWeave, Astera. A lot of folks in that broader AI ecosystem getting pretty strong bids here in the after hours.
Yeah, absolutely. Interesting to see such a pop when it comes to CoreWeave in particular. We know that company certainly has been in the hurt locker, but moving higher after those Nvidia earnings. Right now, about 5.5% here. Also, the pure play chip stocks. So you think about some of the moves there in the aftermath of Nvidia earnings. AMD, for example, we're keeping an eye on higher by about 2%. You can see the list goes on. TSMC also higher. So too is Qualcomm.
Broadcom up about 2% as well. We're going to talk a little bit later about the data center build out, and of course the power that goes into that. So you have to keep an eye on names like Dycom and Digital Realty. This is a broad ecosystem, Katie.
A broad ecosystem. Yeah. We're going to cover it all. And of course, a little bit later, we'll hear from CEO Jensen Huang at 6:30 p.m. Eastern time right here on Bloomberg. And again, that call coming at the top of the hour, Romaine.
Our coverage of Nvidia's earnings report continues here on The Close. And now we want to talk a little bit more about the China factor and about the supply chain factor for Nvidia. President Trump said just a little bit earlier that he's actually happy if Nvidia CEO Jensen Huang is happy himself. There was a headline out by Reuters on the heels of those remarks suggesting that plans for semiconductor tariffs are likely delayed. Now, there are a lot of questions right now about Washington's policy towards the AI build-out and, more importantly, sharing AI technologies with China and other nations. Sara Xu joins us right now. She's a clinical associate professor of supply chain management at the University of Tennessee, Knoxville. Always great to talk to you, Sara. There's so many moving parts to this, and it's always hard to know with the Trump administration where they land. There was just another story out just a little while ago saying that they were actually encouraging Congress to remove provisions that would restrict sales of high-powered AI chips to China. When we talk about the transfer of technology or the sharing or sale of technology outside our U.S. borders, how seamless is it right now, if at all?
Well, right now we have a lot of export restrictions. Honestly, it seems really unlikely that Washington is going to tone down its restrictions on advanced Chinese chip exports and other computing capabilities. So I don't think that's something that's likely to come to fruition, but it is a good thing that some of the rhetoric has been toned down. And as you mentioned, Nvidia has really been a part of the conversations between President Trump and foreign allies in terms of being a bargaining chip, if you will. And so it's given Nvidia some power there.
We've spoken with you a lot about the supply chain, and we have to kind of remember that, a chip is obviously made of so many components. We talk a lot about rare earths and other metals and other ingredients that go into making that. A lot of ingredients that we don't actually produce here in the United States. And I know there have been some efforts by this administration to try to ramp up the mining of some of those materials, or at least source them from places other than China. What type of progress have we made towards that?
Well, I think that, we're going to be invariably tied to China. And the reason is because China produces at least two rare earth minerals that the U.S. really needs, gallium and germanium. And similarly, the U.S. produces some tools and software that China needs. So we really are at each other's mercy. This situation is really far from seamless right now, as you point out. And, even though we are trying to create a separate ecosystem, that's going to take time, especially in terms of, some sectors like the automotive sector. We've seen the automotive sector try to call for sort of a separation from China in terms of chip dependency, but that looks really unlikely in the near term.
And Sara, I want to go back a little bit to the idea that Nvidia specifically is being used as a bit of a bargaining chip when it comes to the relationship between the United States and China. I want to bring up some comments that Jensen Huang actually made to the FT earlier this month, saying that China will win the AI race with the U.S. China is going to win the AI race. Of course, we know that China has been essentially locked out of, or Nvidia has been locked out of the Chinese market. To some, this was taken basically as Nvidia's Jensen Huang negotiating with President Donald Trump in public to influence U.S. trade policy, which is a really interesting state of affairs. And I wonder what you make of that, whether that, gives you any pause.
Well, he hasn't been successful, unfortunately, and it's really unlikely that he's going to be successful. I mean, obviously, Nvidia wants to sell chips to China. China's a massive market. And if they could do that, that would really ensure just sufficient revenue and returns for quite a long time. And because of that, we've seen Nvidia go in some different directions, such as investing in other companies and so on. But, I think that there is sort of a ceiling on Jensen Huang's power, political clout, because really there are issues with China owning some of the advanced chips that the U.S. wants to sell to it. And China has also said that it doesn't want to have advanced chips from the U.S., especially in state-funded, data centers. So that's the other side of it.
Yeah, and I think that's a really interesting point that let's say that these export restrictions were lifted, whether there really would be demand in the Chinese market to buy these advanced chips from Nvidia. It sounds like you're saying that you take a look at the state of play. It doesn't look like that's the case.
Well, it would really take a lot to ratchet tensions down. And, the U.S. side, if we were to reduce tensions with China and reduce those export controls, then certainly we would expect China to go along with it. I mean, China has said that, if the U.S. wants to reduce tariffs and other restrictions, it's willing to do that. If the U.S. wants to increase its control and restrictions, it's also willing to play ball. So I think that, that dialogue would, have a reciprocating side from China. And I think China would definitely be amenable to receiving advanced chips if this sort of competition and really rivalry were dampened.
All right, Sara, really great to get your perspective. That is Sara Hsu. She is Clinical Associate Professor of Supply Chain Management at the University of Tennessee, Knoxville. Meanwhile, we've covered robots, we've covered China, so let's talk data centers, another critical piece of the Nvidia story. This quarter, data center revenue beating estimates, coming in at $51.2 billion for the quarter versus expectations of $49.3 billion. Joining us now is Dan Peyovich. He is the president and CEO of Dycom, which builds facilities for the telecommunications and utility industries. Dan, great to have you with us. So we know that there has been a massive ramp up when it comes to data center, when it comes to data center needs. What has that meant for your business specifically?
We refer to it as a generational deployment of infrastructure. If you think about what's already happening in connecting the homes of America, we've been running fiber to the homes and businesses. Now we've been moving to connecting large capacity fiber networks to build the data centers of today and the data centers of tomorrow. It's a huge infrastructure investment that has to happen over a really long period of time, but happen in a big way quickly. And the question really comes about how do you ramp up the skilled workforce around that? That's where Dycom comes in, and that's part of the acquisition that we did today.
And talk us through a little bit more of that acquisition in terms of what that actually gives you when it comes to exposures. Why this acquisition and why now?
Yeah, as you said, the data center market is exploding. It requires a huge skilled workforce. And no matter which model you think about for AI, the AI race runs directly through the skilled workforce. So today we provide all of the communications networks across the country, not all, but we provide communications networks across the country to connect the data centers. We take it all the way to the data center itself. The acquisition we did today with Power Solutions, we bring it now inside the walls of the data center. There's a huge amount of electrical infrastructure that has to happen inside to get these data centers powered up. As you talked about, the builds continue to grow. They've been growing for a long time, way before AI. I worked on my first data center in 1998. They've grown ever since then and will continue to grow. The inflection from AI is a massive need, and this acquisition really helps us to step into that need with our customers.
And give me a sense, Dan, though, of the time frame. So, I mean, we've been talking a lot about some of these AI data centers that are breaking ground, but the idea that the power to connect to them often may actually take longer to get up and running than the actual completion of the project. Are we going to start to see maybe a narrowing of that gap?
Yeah, that's a big part of the push for the skilled workforce. There's a lot of things that have to get solved to get the power in front of the needs for the hyperscalers and for the folks that want to build. But we have to remember that there's still a huge amount of infrastructure that's getting built today. There's still a huge amount of infrastructure that has been being built. So we can talk about the level of inflection, and certainly it's going to be limited somewhat by the power that's going to ultimately get to these data centers. But in the meantime, we still have, again, massive amounts of infrastructure that has to get built in the coming years, and you got to have the people that are stood up to do that.
The other part of this also is the idea of reliability, and we've talked with a lot of executives that are part of this build out about this idea. It's not just about connecting the power, but the idea that that power will indeed be consistent and reliable, and more importantly, Dan, also in sync, at least assuming you're connected to the grid, in sync, of course, with the power needs of just regular old homes and businesses here. What does that conversation look like?
Yeah, it happens really on both sides. If you think about the telecommunications networks, it's the same conversation. You got to have redundancy to make sure that, if something does happen, you don't want to have these data centers go offline. It's the same thing on the power side. How do you make sure that you're not only bringing power to the facility to ensure that you have that redundancy, but within the facility itself, you have multiple components that you're going to build into that to make sure that if you do have any issues that come up, you can keep that uptime. Uptime, as everybody knows, is a huge component of how you build these and how you plan them in advance.
And Dan, one of the sort of overhangs that has been lurking when it comes to the entire build out and the different components that contribute to the AI data center build out is just the concept that maybe there's been a bit of overbuilding, or that will be proved in the quarters to come. And you think about fiber, that is the parallel that's often drawn. That you think about the fiber build out of the early 2000s, maybe we're seeing a similar chart be put into place here. And I wonder, how you think about those concerns and how you would potentially push back.
Yeah, well, first, the fiber networks haven't really been refreshed. If you think about the networks that connect America, what we refer to as long haul, but connects the data centers from one state to the next, one city to the next, those have not been replaced in 20, 30 years. So you do have just aged infrastructure. In addition, the capacities are not even close to what's needed, even for compute capacity required today, never mind where we're ultimately going with AI. So you do have this huge pent-up demand, and these are very long projects, very long builds. The same thing on the data center side. The data centers themselves, again, we use more and more data every year. That's been consistent for the last 3 decades. That requires ultimately more compute capacity, which leads to building more data centers. The question is what can that ramp to and what that inflection is going to look like? And as I said, there's a lot of things to work through. But what we're focused on today is how do we build the skilled workforce? We have over 19,000 men and women working nationwide, really building up that skilled workforce to make sure that we can be there for our customers to help them ramp into their growth needs.
Dan, I wanted to, if you could kind of just draw on, I mean, obviously you've had a long career in this, just the infrastructure space overall with data centers, and of course now adding the power component to it. Geographically, are we going to start to see a more dispersion with regards to where these things get built? I know right now, I mean, some of the easier places to kind of build out, like in Texas and Virginia, I guess to a certain extent Illinois. Does that geography, does that expand, or are these locations being picked because they are prime in some way for what needs to be done?
Yeah, you are seeing it expand. And again, that's been the case for a long time. There's always a need to find access to power. There's always a need to find access, of course, to enough land to build these data centers and expand the campuses over time. But you still have these core markets. The Power Solutions, the business that we just acquired, they're in the Northern Virginia, Washington, D.C., Maryland market. That is a massive data center. It comprises the largest data center market in the entire world. It's 27% of the data center capacity in the U.S. today is in that market. That market's going to continue to grow. Maybe not at the same relative rate, but there's a huge amount that can still continue to be built there. At the same time, and to your point, yes, expanding into other markets, looking at other geographies where they can find power, where permitting can be streamlined, where they have access to the power that they need today. And then again, it does also come down to the skilled workforce. They have to have a requisite skilled workforce when you're talking about, hundreds of electricians and thousands of workers on these sites at a time.
Dan, really appreciate you taking time for us. Real fascinating. We got to get you back here. And also congratulations on the most recent quarter there. Dan Peyovich, the president and CEO over at Dycom, as we continue our coverage here on Bloomberg Television of Nvidia's earnings. We just heard in that press release exactly what those numbers look like. They seem to please investors. Now we're going to hear from the man himself. Jensen Huang at the top of the hour will have his conference with analysts. Then at 6:30 p.m. tonight, Ed Ludlow will have a sit down with him to ask him maybe a little bit more, to expand, if you will, on his vision for the future. Ed Ludlow joins us right now to talk a little bit more about what he may ask. But Ed, I'm going to start off with a question I want you to ask him.
Sure.
What's going on with China?
Yeah, it's so interesting that they don't even use the word China in the statement. And if you read the CFO commentary, they say that H20, which is a China-specific product, sales were insignificant. And that's maybe why they don't feel the need to say that China is stripped out, as they did in August when they guided for the fiscal third quarter. It's still critically important, right? To Jensen Huang's mind, on paper, China is potentially the most important data center end market in the world, but it is one that right now they don't play in. And they don't play because, as they always say, they conform to US laws and they are awaiting just definitive permission to do something in China, most of which has been the president talking about Blackwell. Jensen Huang has always been very disciplined in saying anything that front-runs the president, but we just don't know. It's a great question, and we'll have to go there.
Yeah, and it's interesting. I mean, you think about the president of the United States saying today that if NVIDIA's Jensen Huang is happy, I'm happy. I have to imagine, though, even though China specifically isn't named in some of these materials, that the fact that they're still locked out of the Chinese market, that's something that Jensen Huang maybe isn't too thrilled about, Ed.
Well, if you look at the fiscal fourth quarter sales outlook, $65 billion is a few billion ahead of what the street was expecting, although some on the very bullish end saw them maybe telling us $75 billion. That's one data set that you have to marry with what Nvidia told us on October 28th in DC, that over the next 6 fiscal quarters, they see $500 billion of sales just from Blackwell Rubin, completely excluding China. You know, the assumptions that they've made for that long-term forecast, which historically Nvidia doesn't give, assumes no China revenue. So anything that comes out of China at this point is upside. Whether Jensen Huang can get both the President of the United States and the administration in China to agree on something that would allow them to move forward there, we just don't know. It's more complicated, I suppose, than Jensen Huang saying, well, I'm happy, Mr. President, let's do this. And if Huang is happy, the president is happy.
Hey, just real quickly, I had only about 40 seconds left here, but what about the relationship that Jensen Huang seems to have with this White House? And how much of a factor has that been, at least as of late, in its success?
Yeah, he's in close proximity to a lot of people that matter. The White House's position is that they are China hawks, but it's better to sell deprecated technology to China than none at all. That goes some way to answering Katie's question. Jensen Huang wants to sell something to China, and he appears to have influence on the president and those close to the president that inform policy. They seem to agree on that, whereas other more historic hawkish factions might not.
All right, Ed Ludlow, we're going to let you get back to it. Ed's got to prep for quite a few things. First of all, at the top of the hour, the conference call starts with Jensen Huang. Then he has a sit down with the man himself at 6:30 p.m. Eastern time. That will be right here on Bloomberg Television. Katie, you going to be watching?
I'm going to be tuned in. I won't leave this building until that's over.
Futures are higher. Of course, the magnetism of Nvidia giving a boost to the broader market. This is the close on Bloomberg.